I asked ChatGPT, is it a good idea to leave your spouse off your mortgage to save their first time buyer discount so that they can buy another house later in their name and use the discount? You might be surprised what ChatGPT had to say. It's a question I get asked a lot, so let's talk about it. My name is Anthony Lindsay, and I've been in finance for over 30 years. I've done wealth management, debt collection, and lending. I make these videos to talk through things that I usually end up talking to my clients about, questions that they ask, and also questions that people ask me to cover in my videos. The videos are not legal advice, they're not financial advice, and you should always speak to a professional because your home could be repossessed if you fail to keep up with the repayments on your mortgage. So as I said, I asked ChatGPT, is it a good idea to leave your spouse off your mortgage to save their first time buyer discount so that they can buy another house later in their name and use the discount? Usually someone's asking this question because some guru, some accountant, some IFA, or someone online has said this is a good thing to do. So I've asked ChatGPT and we're going to go through a few of the responses. First, let's understand what is stamp duty in the first place. Stamp duty land tax is a one-off tax you pay when you're buying a home or land in England or Northern Ireland. You pay it when you buy residential property over a certain price, you buy an additional property like a second home or a buy to let, you transfer property in some cases. So, for example, in a divorce or inheritance. I'm not going to go through what the thresholds are for stamp duty because that can change, and hopefully this video will be up for a while. But if you go to the government website, you can calculate what stamp duty would be assessed on a property. Always try to use government websites because you know you're getting the correct information. And please don't get your advice from TikTok or your barber. So, should I do it? Is it a good idea to leave your spouse off the mortgage and or title to preserve their first-time buyer status? It comes with major caveats that you must understand before making the move. Here's a breakdown of the pros and the cons. So what we'll do is we'll talk through some of the impacts, and you may find that the money that you think you're saving isn't worth it, considering there's no guarantees that it will actually work. So why some couples consider it? In the UK, first-time buyer stamp duty relief applies only once per person and only if you've never owned property before anywhere in the world. So if one partner already owns a property or is buying now, and the other is truly a first-time buyer, keeping the first-time buyer off the mortgage and off the legal title of the current purchase could mean they still qualify for first-time buyer relief on their own in the future. So what's the logic? If they're not on the title, then technically they haven't bought a property, even if they live in it and pay. There's the rub. Technically. And another thing that you would see in what ChatGPT has said here is that they must not have owned any property anywhere in the world. So sometimes people forget about that part. So the question is, why would somebody want to leave their partner off the mortgage to save money? And quite often they forget there's lots of things that you want to watch out for. The online gurus and the people on TikTok will not tell you this. So make sure you listen. One of the things to look out for is the legal ownership versus the legal right. So if your spouse isn't on the title deeds, they don't legally own the home. If something happens, so if there's a relationship breakdown or a death, it could get very messy. And I've seen that happen. Unless you have a deed of trust or other agreement in place and a will. Regardless of the situation, you should make sure that you have a will. There's a few documents in life that every adult has or should have. Your birth certificate, you have no control over when you're born. When you pass, you'll have a death certificate. You'll have no control over that in most cases. But a will is a document you should definitely have. And even if you're not looking at this potential of leaving a spouse off, you should always make sure that you have a will in place. But it's very important if you decide that you're going to do this, because the other person does not have any legal ownership, you're going to need a lot of paperwork. Otherwise, things can go horribly wrong. The other thing to look out for is mortgage responsibility. If they're not on the mortgage, they have no obligation to repay it, which might be fine, but it also means only your income is assessed. You might qualify for less. The rate or terms could be different. It might and actually will affect your affordability if your income isn't sufficient on its own. We live in a world where men and women are both working, and both incomes are usually required just to maintain a house, but certainly to buy a house. So if you are deciding that you want to leave the other person off the mortgage is going to be assessed purely on one income. And that one income is going to be lower than two incomes. So let's just do some simple math. Let's just say each person is on £25,000 a year. It's not a lot, but it makes the math easier. 25 and 25 is 50. We use a basic income multiplier to just assess quickly how much of a mortgage someone can get. We use an income multiplier of 4. Brokers, don't get on my case about this. I use 4 because it's easier and it can take into account affordability. So 4 times 50 is 200,000. So the couple would qualify for a mortgage of 200,000 plus whatever their deposit is. Right. If someone decides they're going to leave the spouse off, then the income is only 25,000. That means they only qualify for 100,000. So that means that they're not going to really be able to get that great a property because they're going to qualify for less. The other thing to keep in mind, and I say this as a mortgage broker, lots of lenders will not allow this type of setup. So if you're married, a lot of lenders will require both people to be on the mortgage. If they don't require that, then you're going to have to think about the affordability side of things, because the assumption is if you're the only person on the mortgage, you're then assuming the responsibility for the household. So all the bills are going to be taken out of your affordability. So it puts you at a disadvantage and it gives you fewer choices. In getting a mortgage, it's all about making sure you have as many choices as possible. By going down this route, you lose a lot of choices. The next thing to watch out for: mortgage lender restrictions. As I said, some lenders don't allow this setup if the non-borrowing partner will be living in the home. And if you're married, they're going to be living in the home, and you can't lie on your mortgage application. Others might ask them to sign a waiver or an occupier consent form. Let me stress that when taking a mortgage, always be open and be honest. There's specialist lenders that will match almost any circumstance, but it's important that you're honest because you don't want to commit mortgage fraud. And because we have specialist lenders we can place you with, when we know what your circumstances are, and if it's that you want to keep someone off the mortgage, we can find a lender that will assist you with that. Last thing to look out for: stamp duty complexity. And this is a big one. This is a really big one. If your spouse later buys another home, but you're still married and already own one, HMRC might view you as having what's called a link interest, especially if you share finances, and you probably do. They'll see that on your bank statements. They contributed to your mortgage or deposit. Again, they'll be able to see that on the bank statements. You both live in the original home. This could mean that they're not eligible for the first-time buyer relief after all. There's no black and white answer. HMRC has broad discretion. So let me just put this in real terms. The guy on TikTok told you, leave your wife or husband off the mortgage that you can retain that relief of the first-time buyer. You follow the instructions. The person that told you that isn't licensed. They don't know you. They're just somebody on the internet. You purchase the first home, you purchase a smaller home than you would have been able to. You get a higher rate potentially because you've gone to a specialist lender. Later on, when you go to buy the second property, or your spouse goes to buy the second property, HMRC might block it anyway. You might end up having to pay that stamp duty because they might say, well, this person has a linked interest in a property anyway. So after all of that work, after downgrading and downsizing and sacrificing, it may not pay off. Final thought: it might not work, and it might work, but it's not guaranteed, and it can backfire. HMRC sees through the plan and denies relief later. It could backfire if the couple breaks up and the non-owner partner is left with no legal stake in the property. That's just going to be drama. You die or you fall out and the home goes to someone else. So all of the planning, and I might say all of the scheming, was for naught. As you can see, ChatGPT does not look at this structure favorably. ChatGPT could be wrong. You should always speak to a solicitor. But when you're speaking to the solicitor, you're more talking around the legalities behind it and deeds and things of that nature and getting the right documentation in place. Keep in mind, a solicitor is not a mortgage broker. So the solicitor is not going to be able to explain lending criteria. They're not going to be able to explain loan to valuation and different hurdles that you'll need to get over in order to get the mortgage in just your name, if the case is that you're simply trying to avoid paying the stamp duty and retaining the first time buyer's relief. If that's the only reason why you're doing it, then that solicitor won't be able to really adequately advise you. You can speak to an accountant, but again, they're not mortgage brokers, so they won't be able to adequately advise you. So you need to consult professionals, but the mortgage broker is going to have a better understanding of lending criteria. The solicitor, legal stuff, accountants, money stuff, but lending criteria, lenders and mortgages, the mortgage broker will be able to explain that to you. Best practice: as I always say, get legal advice, especially from a solicitor who understands property and family law. Put a deed of trust in place if the non-owner contributes. Consider affordability and tax planning in full. Don't look at this in isolation. And document everything, especially if you're trying to preserve the first-time buyer status. And that's another awkward one. So you and your wife have decided that you're going to do this to save the first-time buyer's relief. And you say, wife, husband, could you sign this document, please, to say that, it's just a messy, cumbersome conversation that is needless for the sake of saving some money if you're actually going to save it. So if you're doing this just to save a few thousand in stamp duty, but you're risking tens or even hundreds of thousands in equity, legal complications, or future tax issues, it's probably not worth it. Short-term savings should never come at the expense of long-term security, especially in something as serious as property ownership. So think this through. In my experience, as I said, most of the time people are considering this kind of complex approach to things because they've seen something on the internet or someone in a property group has told them. It's usually based on like pretty bad information, if I'm honest. It's probably the barber. That's not to say that there aren't some circumstances where this might be the right thing. However, in most cases, I've just found that the reason why people are doing it is to save money. And as they say in America, you cut corners and you end up buying them. So make sure you go into it well advised. Don't just look at ChatGPT and say that that's the be all to end all. ChatGPT can get these things wrong. Make sure you go to government websites to calculate the stamp duty. So on that second home, it may be that there would be no stamp duty anyway because you can only afford a smaller home because it's only one income. So make sure that you're doing your due diligence. I'm not giving legal advice. I'm not giving tax advice. And I'm not here to replace you speaking to a qualified professional who understands your circumstances. Anytime you're talking about mortgages, you do need to keep in mind that your home could be repossessed if you don't keep up your mortgage payments. So always give careful consideration and speak to a mortgage broker. My name is Anthony Lindsay, and I make these videos to share information. If you have a topic that you'd like for me to talk about, please share that in the link. Make sure you like, comment, and subscribe. If you know someone, especially young people, who are looking to purchase a home in the future, don't wait until they're ready. Start sharing my videos with them. I have a great video about Gen Z and the fact that they can actually buy homes. Make sure you put your comments, make sure you like, but more importantly, make sure that you subscribe. That's the only way that I know that you are actually interested in the content that I'm making, and you'll also be notified when I make new videos. I'm here to help. And if you need a mortgage broker, just scan the QR code, book an appointment, no pressure. I will talk you through the entire process. And after that, if you decide that you want to work with me, great. If not, that's great too. I'm really fast. I have a video about that too. And I'll talk you through the process of meeting with me. In the first 7 minutes, we'll establish if you're able to get to the number that you need to get to. Thanks for watching. As I said, make sure you like, subscribe, and make sure you share this video with anyone who might need a mortgage.